Accounting Influencers Broadcast Network presents Influencers in Accounting
with Rob Brown and Martin Bissett.
Brought to you by Advanced Track.
Welcome to the show, and I'm delighted to have with me today the legend that is Ed Kless. Ed, hello to you.
Hello, thanks for having me.
It's a pleasure, Ed, and you truly are an accounting influencer, but there may be one or two people all over the world that haven't heard of you. Just tell us a bit about your background and your expertise.
Well, it's real interesting because I was mentioning before we started recording that I have the best job in the world, and I really definitely believe that, especially at Sage. We have a CEO who he has the highest profile job, but I have the best job because my job for the last 16 years has been to help our business partners, whether they be people who are reselling our software as we do at Sage or also influencing the sale of our software through our accountants programs and things like that, help make their businesses better. So I don't get involved transactionally per se, and how much software are you going to be able to push this month, which, and we got people to do that, and that's great. That's what we're a software company. That's what we're supposed to do, sell software, right? But my job has been and role has been to really just help these people make their businesses better. And that's been extraordinarily freeing because what I've been able to do is concentrate on things like the evolution of the business model around professional firms. And that's led me to work to one of your previous guests, Ron Baker, and all kinds of fun stuff like that. To what can I focus to help them really make their businesses better?
Why is Sage so good to work for, Ed?
Why is what so good to work for? I'm sorry, I missed that.
Why is Sage so good to work for?
Oh, gosh. Sage is an amazing company from a lot of perspectives. One, I think I've been given freedom, right? And one of my favorite books is a book by Peter Block called Freedom and Accountability at Work. And if you perhaps we want to delve into this because it's a fascinating topic. But in this, he says that freedom and accountability are the same thing, right? We oftentimes think of the fact that that accountability is like this imposed thing, but it's not. Accountability must be chosen. I'm accountable to my spouse. I'm accountable to I choose it. Right? And if you really want to give people accountability, or if you really want to have accountability at work, you've got to give people their freedom. And that's what Sage has done for me, has given me my freedom. In addition to that, we'd do incredible things with the work that we do for the Sage Foundation. Every single colleague across Sage, I believe this is true worldwide, has up to 5 days that they can do on an annual basis where we can go work for any charity of our choosing. We organize days around, so if people want to do this stuff as a group, they can. So Habitat for Humanity here in the States is a really big one. People go and build houses in low-income areas. Fantastic work. So it's a great company. We had good benefits and just a wonderful place to be. And as I said, where I am, given my freedom to do what I want.
Yeah, sure. Now there was a time when Sage was the only gig in town, but it's got very competitive in that space now. What kind of shape do you feel you're in to compete?
We're in a similar position to lots of different places making a transition, right, to full cloud. The industry overall, and I'm going to back out here and take a view of not just the accounting industry, but software in general. There have been some companies that have been able to make the transition fairly successfully, Adobe being probably the best known, right, that has made the transition from on-premises, with an S, by the way, not on-premise, different thing, on-premises to cloud-based. And I think that we are following in that footsteps, and we've done fairly well. We've still got a lot of work to do, but it's because it is a change not only to the technology but to the business model.
Yeah.
Right? And that is always a much more difficult change to make when you're shifting away from one business model to the other. And it's not often that companies are able to do that, right? It's not often that companies are able to change not only the technology but the business model itself.
That's a really good point. We interview experts all over the world here and ask them, what do you feel makes the good accounting firms great? And one of them is the ability to change that agility. And usually you get that in the smaller firms because they can pivot quickly. But the larger firms can also do it because they've got the big resources and the strong leadership from the top. What do you feel is driving change at the moment?
Well, it's interesting that a lot of people would default to technology. I think technology is always accelerating, right? Barry Melanson, who's the head of the AICPA here in the States, had a quote at his recent conference that they had where he said was, "The pace of change is right now as slow as it's ever going to be." right?
Frightening.
Right. And when you think about that, yes, that's true. But I hate to sound like a broken record here, but it's the business model that changes. Andy Grove, right, the CEO and founder of Intel, said the biggest threat to disruption is not new technology, but new business models.
Yeah.
Right? It's an afterthought. The technology comes along for the ride, but it's the change to the business model that makes it. You know, the example that is probably classic, most people understand, is what Apple did in the recording industry. You know, Apple released the iPod in October of 2001. I want you to think about that. The original iPod was October of 2001. It was the dot-com boom, right, or bust was taking place in the middle of all of this. They priced their device at 2.5 times the price of their nearest competitor, right? So 2.5 times more.
Yeah.
Had never done a consumer electronic product before, right? And yet they're successful, goes on to be one of the most successful products in history. And why is it? Not because of the technology, but because they changed the business model of how you acquired music. You know, back in 2001, the way that you acquired music was you really got ticked off because you had to plop down, 20 pounds or whatever for an entire CD. You only wanted one song because 14 of them sucked and one was good. Right? So you went crazy over this. And Apple, actually in response to Napster, if you remember the original Napster, said, how about we just sell you the one song you want for $1? And we all said, yeah, of course we'll do that.
Yeah.
Right?
Yeah.
And so that is a change to the business model, because the business model, the way I like to define it, is how does your firm create value for and then capture that value as some percentage of the value it's created through your pricing.
Yeah. We'll go into business models a lot deeper, but what in essence makes a good accounting firm great for you?
What makes it great is you mentioned it. It's adaptability, right? Darwin did not say survival of the fittest. He said survival of the most adaptable.
Okay.
Right?
He's misquoted then.
He's misquoted. It's absolutely misquoted. It's not survival of the fittest, because fittest would mean biggest. Well, the dinosaurs didn't survive. Sure. They were by far the most fit, but they were the least adaptable. The most adaptable were the mammals crawling around that were able to get underground when the meteor hit, right? So it's the survival of the most adaptable. And you're right. Size has nothing to do with it. Size has absolutely nothing to do with it, because yes, you laid out the arguments perfectly. I hear this all the time from people. Well, we're too big. We're too big to be adaptable. Yes, but you have the resources. Or we're too small to be adaptable. We don't have the resources. Yes, but you're small. It's easier for you to make the change.
Yeah, great.
Right? So size has nothing to do with it. And I think people have to focus on adaptability as strategy.
Yeah.
That our strategy is to be adaptable.
What are the key facets of adaptability? I know one of them is the right business model, but just dip into that a bit for us, Ed.
It's being open to seeing what's on the horizon. You know, the great work that Nassim Taleb has done around black swan events. Yeah. Right. The very famous book. And if you haven't read the book, you probably know what a black swan event is, right? It's this event that we didn't see coming, that retrospectively changes everything. And in retrospect, we go, yeah, we absolutely should have seen that, right? Yeah. Like, of course. And I think what has to happen is the firms that keep their eyes open to these black swan events that are coming down, because even if you see them first, you can be far more adaptable than other people. So it's that willingness to look forward and to do this. And this is one of my most fun exercises, is to sit around. Here's where strategy should begin in any company, but in accounting firms specifically. How are we going to create value for companies that we serve in the future, or people that we serve in the future 5 years from now? That's the starting strategy question. Not how are we going to create revenue? How are we going to create value? How are we going to help people 5 years from now?
But Ed, how tough is that, given that few people can put a finger on what's going to happen in 12 to 18 months?
Well, it's extraordinarily difficult, but it's the notion is that you must be looking towards that and allocate a good chunk of your thinking to that conversation in your brain, right? Yeah. I personally believe, and Tom Peters has said this for years, that we have to spend more time on strategy, not less. Far too many firms, strategy may be a once-a-year retreat where the partners go away to Oslo and sit around and do whatever, right? But what we really need is we need strategy to be thinking about a weekly strategy check-in. What's new? What's changed in the last week? And what adoptions can we make today to that end? So I think it's really hard. No, it's really hard. That's why most people don't do it.
And how much of a challenge is it for accounting firms, given that the majority of the leadership in the firms are baby boomers? They're old school, they're traditionalists in a way, and not many of them are millennials who are perhaps easier in driving change.
Yeah. Okay. So there's two things on that. I don't buy that baby boomer millennium. No. To me, the whole generational thing at work is like astrology for business.
Okay.
Yeah. It's like, they're a Scorpio. What are you going to do?
Yeah. Got a sting in their ass, right?
Yeah. It's like, they're just that's how they are. They're Scorpio, right? And I think the same thing is, and it's the danger of labeling, right?
Yeah, right.
I've seen plenty of baby boomers who are extraordinarily forward thinking and adaptable.
Right.
Now, have I seen baby boomers who sit there on their butt and say, you know what? I just want to run the table. As long as the wheels don't come off while I'm managing partner, and that's 18 months.
I'm cashing out. Yeah.
That's it. Right.
Yeah.
Do I think that so there's a little bit of both. So I don't buy the label thing, but be that as it may, I think the point is true that there are people who are very averse to risk, right? And I think that's part of the problem. Profits come from risk. Profits come from taking risk. That's where profits come from. If you don't want to take any risk, cash out your firm and put everything in government bonds. You'll earn 2%. You'll make a 2% profit, right? If you want to make more than a 2% profit, you got to take a risk.
Yeah. It's too risky to play it safe.
Yeah. Well, and this is a great thing that I think is misunderstood about Peter Drucker, right? Peter Drucker had three possible types of risk. The first type of risk is that the risk that a business can afford to take, right? The second type of risk is a risk that a business can't afford to take. But the third type of risk is the most misunderstood, and that is the type of risk that a business can afford not to take.
Okay.
Here's the problem. That third type of risk is never identified by doing an ROI analysis. You can't do it because ROI presupposes type 1 or type 2 risk, right? Yeah. But that third type of risk will never be identified by an ROI.
No, and there's some great examples in the book Decisive by Chip and Dan Heath, and they talk about how difficult it is and how inept we are at making good business decisions.
No, absolutely. We are terrible at it, And again, it has to be a focus on the future. The entrepreneurship, the French word meaning undertaker, which translates terribly into English, right? It means someone who's undertaking an endeavor, right? Yeah. And it's a journey, and you have to be constantly looking forward in that journey. The great quote from Eisenhower, who with Montgomery ran D-Day, right? This whole notion of that the planning is essential, but plans are worthless, right? The plan itself is worthless. It's the act of planning. It's the gathering of minds together to talk about the planning process where the value is.
Mm-hmm. I love the boxer Mike Tyson's quote, anyone can have a game plan until they get hit hard in the face.
Yeah.
So what do accounting firms learn from other industries?
Sadly, very little. I mean, I think that's one of the downsides of an accounting.
Is that because they're not outward looking, Ed? What's the deal?
And I'm being unfair here. I think many businesses are not outward looking, right? There's a I don't know. I think there's a cult in business today, but in accounting firms especially, this cult of efficiency. Have you heard of these guys? There are priests in this cult. They're called Lean Six Sigma black belt people.
Yeah.
This is a cult. This is a cult that is focused on eking out every last efficiency, right? And here's another, going back to the Darwin thing. The dinosaurs were very efficient, right? And that's still true today. The last buggy whip manufacturer was the most efficient, right? Before they were the last maker of ice boxes before refrigerators came along was the most efficient, right? So efficiency in and of itself is not a desirable goal. I contrast efficiency with effectiveness, right? Efficiency is doing the thing right. Effectiveness is doing the right thing. Right? And here's the problem, and this is Peter Drucker, why it all goes back to Peter Drucker. He says there's nothing so wasteful as doing that which is ineffective efficiently.
Yeah.
And there are far too many firms that focus on doing things efficiently when it's the wrong thing.
Yeah, but even take cloud, for example. There are 80% of firms here in the UK are not on the cloud. I mean, that's the most efficient and the most effective thing to do. So why aren't they adopting?
I don't know necessarily believe that it might be the most effective. Right. For them. Right. Now, over time, yes. Yeah. Over time. Right. Sure. Over time. But I think we have to understand that, especially in the mid-market, because I play in both the small business and the mid-market space. In the mid-market, some of these systems, such as, the Sage products that go back decades, right, for these mid-market, those suckers, those are those are fine-tuned machines that have been customized and get exactly what people need out of it. All of the stuff that we put into it, and here's the real, in the end, debits equal credits. Debits equal credits. We haven't done triple entry bookkeeping yet, right? So ultimately, if the system is working for them and a fine-tuned machine, look, moving to cloud, huge struggle. Yeah, it's not going to happen.
But an accountant of 20 years ago is a very different animal now, isn't it, to an accountant of these days?
I don't know. When was the last innovation in accounting?
Ooh. And yes, a great question. And really, is the innovation coming from outside in the tech world driving change in the accounting, or from clients even?
Right. I have this great slide. It's a joke. It's the new accounting innovation, right? Here is the old way. Customer shows up with the shoebox full of receipts. Yeah. Right. New way. Customer shows up with the Ziploc bag full of receipts. Right. That's the new technology.
Yeah, sure.
Right? But what's the latest innovation in accounting? I mean, you might say the statement of cash flows. I mean, when's there been an accounting innovation? Like really a pure innovation in accounting?
Let's talk about business models for a moment. How have business models in accounting changed over the years, if at all?
Some of them have changed. Yeah, there are people who are moving to this. And of course, the biggest one, and the one that Ron and I have been involved in, is the whole movement toward value-led pricing, value pricing, however you want to talk about it, value-based pricing. And of course, the elimination of timesheets. Right. Yeah. And this is where this, it comes down to this, is that the business model of we sell time is dying.
Yeah.
Dying.
But it's still alive and well in a lot of places, isn't it? But I take your point.
It's dying, right? This is where technology is supplanting all of this stuff, right? That's the big problem. Is look, there are systems now that can do what used to take rooms full of people, right, to literally 10 minutes.
Yeah.
Right. Well, that used to all be billable time. And when that was the case, we had the pyramid in accounting, right? We had the new grads moving in, and there was this big pyramid scheme, and it filtered all the way up to top. Well, now even the accounting grads are not going into public accounting, at least in the States. There are more accounting grads in the States today, percentage-wise. And the number of people graduating with accounting degrees is going up.
Right.
But the number of people going into public accounting is going down, right? Because they're going into other things. They're going directly into industry. They're like, I don't need the CA or CPA, as it's called here, right? I'll do whatever I need to do over in private industry.
Yeah. There's a stat just come out in the UK that says 50% of the CEOs in the FTSE 100, which is your Fortune 100, have accountancy qualifications. They're accountants. So they're obviously doing something right and making good decisions. But I want to come back to value, Ed, if I can. You mentioned it a lot in driving strategy, and it's now driving business models. What is the definition of value in the Ed Kless Dictionary of Business?
I steal all of my best stuff from other people. Very few original thoughts here, but the value is defined by economists as the maximum price that a customer will pay for an item.
Yeah,
right. That's the classic definition of value.
Are you going to tweet that?
Probably. But so here's the thing though. There's in any transaction, there are three different things going on. There's the value, there's the price, and the cost.
Yeah.
Right. And the value is the theoretical maximum that the customer would pay. Now they're not going to pay that. That's just a theoretical maximum. But they should pay. They'd be willing to pay $1 less. Let's say they don't, but that's at least the theory, right? So that's the value. Then there's the price, and then there's the cost. Well, let's just take it in reverse order. As an accounting firm, as a business, do your customers care about your cost structure? Like, do you walk into a coffee shop and say, "I hope they have their cost structure figured correctly"? You don't care,
no,
right? So you don't care as a consumer. You don't care about the cost structure. So why do accountants argue with their customers about costs? Well, it took me 5 hours to do that. That's your cost. I don't freaking care. Right? It's madness.
Yeah.
Right? Okay. Do customers want prices to be higher or lower?
Lower.
Can we just accept that as a universal truth?
Yeah.
Right? I mean, okay, because blaming we lost the deal, we lost this engagement on price. It's a lot like blaming an airline clash on gravity. What caused the gravity? Gravity. No kidding. Right? But value is the perception of value of the customer. See, it's not, there's no objective definition of value. It's always subjective. Value is what the customer says it is.
So when you go back to your question on strategy, and firms should be thinking, how can we deliver more value in 3, 4, 5 years' time? And not defining the direction of the firm. If we use your definition of value, they're actually asking, how can we increase our clients' perception of value in the coming years?
Yeah, absolutely. And here's the thing. You can actually create value in the perception of the customer's mind by not necessarily changing your product. And I'm going to give you an example. Before we started recording, we were talking about this guy, Rory Sutherland, and this is from him, right? So I steal from the best, right? So this was his idea, and you will appreciate this. So the British government or whoever it was came to him and they said, we want to do this campaign, right, to figure out a way to get people to drive. Well, let me give it a different example. To increase the speed of the train that goes from London to Paris. Right. And there was this whole huge thing, and I forget how many billions of pounds this was to be able to increase by 30 minutes. I mean, it's going to cut the journey down by 30 minutes. And Rory said, you know what? I can increase your customer satisfaction for 1/10 the price. 1/10 the price, right? He says, here's what we're going to do. We're going to take that money and we're going to take 10% of it, and we're going to hire male and female supermodels to pass out free Chateau Petrus to everyone on the train. Right? And he says, you know what? People will ask for the train to be slowed down.
Longer journey, more champagne. I like it.
Right, because that's the perception of value is what's the journey, right? What's happening on the journey.
But isn't one of the key struggles that accountants have with the whole pricing thing is that it is so subjective, Ed? Because one person's value means nothing to another person.
Yeah, which is why one of Ron and my most popular shows in the last couple of years that we did on the Soul of Enterprise has been the one that we did on the value conversation. The skill that all professionals have to become the David Beckham, Wayne Gretzky, Babe Ruth, sports legend of choice, right? That they have to become the best at is this value conversation. And the value conversation is simply this: the conversation that you as the professional have with the prospective customer or your current customer, right? That allows you to elicitate, to extract their perception of value. You can't impose your perception of value on them, but you can ask great questions that allow for that perception of value to come out from them.
For example?
Yeah. Okay. So for example, okay, this is my most famous example. This is the thing that happened to me. This is a long, long time ago. A guy asked me for a custom report, right? I was doing this accounting system implementation. You want a custom report that did inventory turns by item category.
Right.
Didn't exist, but I thought it would be great for me to break into my Crystal Reports prowess at the time, and I create the report for him. 5 minutes later, I'm like, boom, this is the report, right? This is during the demo. We hadn't gotten the deal yet, right? So I produced this report for him. He's like, great, that's fantastic. I love it, right? We get the deal. It's $60,000 deal, right? So it's a pretty good deal.
Yeah.
All right. 6 months later, he throws his arm around me and he says, Ed, you know that report that you gave me? I'm like, what are you talking about? Because I did it during the demo, right? I couldn't even put it on my timesheet.
Yeah.
Right? He says, well, we've been able to figure out that because of that, we have that information in that report, we're going to increase our sales this year, our revenue this year by 40%.
Whoa.
It's roughly a $10 million company on a run rate for 14. Okay. So what was the value of that report to him? $4 million.
Wow.
Right. What did I get for it?
Nothing.
0. Okay. So that was the story that clicked me the other way. That sent me on this path down this, I've got to figure this out because this doesn't make any sense. Right. So, however, and what I've since discovered then, in fact, I'm working on a presentation for it right now. This book, Let's Get Real or Let's Not Play, on Khalsa, right, was the eye-opening experience, because here's what I should have said to the guy. Thanks for asking. We do customizations like that all the time. However, oftentimes you don't need a customization to get the information you want because there's other ways of getting it out of the system. Would it be okay if I asked you a couple questions as to why you think you need this report?
Yeah.
He says yes, and then I drop into the conversation, really? So what if you had this report, what was going to happen? He says, well, we would be able to get all of this stuff. Oh, really? What would that cause? Well, now, would he have come up with $4 million? Probably not, but he would have come up with $1 million.
Yeah.
Right?
It's a lovely framework. I coach the accountants on our programs. We teach accountants to win work, and we get them to have a benefit conversation and then a value conversation. So a benefit is what stood out for you about working with us. What do you like about working with us? And then when they say something, then you ask the why question, which is the value. Oh, really? Why do you say that? Of all the things you could have said, what prompted that? And when we're able to do that, why does that make a difference to you? And that starts to get into the value rather than just what we do for you.
Love that. And, Khalsa calls it evidence and impact. And that's some of my favorite questions, especially for accountants, because accountants, if you're dealing with other accountants, right? Accountants who are dealing with other accountants, right?
Yeah.
In business is this question: what's the evidence that you have that this is a problem? And almost always that evidence is value.
Yeah.
Right.
Love that. Yeah.
That's the evidence that you have. Yeah. It's a great question.
Ed, we got to go soon. What do you love most about what you do?
What do I love most about what I do? Seeing light bulbs go off. And it's a combination of two things: seeing light bulbs go off, but it's also this. It's also, again, with 16 years of perspective, and my mentor and I talk about this all the time. It's the understanding that oftentimes the light bulb isn't going to go off. Instead, you're going to light a fuse.
Right.
And the fuse can be of varying length. The fuse can be a day long. The fuse can be a decade long. And I have had the experience of people coming up to me a decade later and saying, you said something 10 years ago that stuck in my mind, and I didn't get it for a long time, and now I get it.
And that feels good, right?
Oh my gosh, yes.
Yeah. Let's get your crystal ball out, Ed, as we close. What's coming up for accounting firms and the profession generally over the next 5 years or so?
5 years or so, because this might be closer to 10, but I do think the almost virtual elimination of compliance work.
Wow. Okay.
Because it's all going to be done by AI and computer. In the States here, for example, we had a big brouhaha about this, but it's almost the exact opposite of you're making tax digital,
yeah.
Right? The government actually passed a law that said that the government would not accept tax returns directly on the. I mean, how stupid is this, right? Basically, giving a monopoly or monopsony actually to Intuit. Like all these other guys who are, H&R Block. It's like they finally reversed it. But here's the deal. We know in the States, and I'm sure you know this with Making Tax Digital, the government knows 90+% of what it needs to know to fill out your tax return.
Yeah.
Right. And if they sent us all a pro forma and said, here's what we got, what else do you want to do?
Yeah.
Right. And I think most people don't realize in the States, one of the biggest changes that the tax change made in the States here by Donald Trump and the Republican administration was the doubling of the standard deduction. Right. Which basically means that the double the number of people don't really have to do anything other than check two boxes and say, yeah, I'm taking the standard deduction. Right. So I think that trend is going to continue, and we're going to have less and less actual compliance work that needs to get done, and and more what I like to talk about as true consulting or advocacy work that's going to need to be done. And look, accountants are positioned well for this, but you know who is even better positioned for this? And this is bookkeepers.
Ooh.
And the reason is that bookkeepers, especially in the US and Canada, maybe not in the UK, but bookkeepers, so people who don't necessarily have their certification, are better at the bedside manner. They're better at the hand-holding. They're better at guiding people through that. Even they maybe not have the quote technical expertise, but they have the relationship skills.
Yeah.
And I think that's one of the biggest changes that you're going to see, and is the doubling or tripling of the importance of relationship skills.
Sure, that's great. And if people want to find out more about the Sage Advice podcast and the great show you've got with Ron Baker, the Soul of Enterprise, and the stuff that you do, what's the best way for them to reach you?
You know, I'm not a very creative marketer, so the answer is go to the sageadvicepodcast.com or thesoulofenterprise.com.
Sure.
So there'll be two websites where you can take a look at both of those properties. The Sage Advice podcast is a short form podcast, less than 10 minutes usually, where we're featuring a guest and telling their story. The Soul of Enterprise, as you mentioned, is Ron and I oftentimes having a guest, but oftentimes just ourselves vamping on things and talking about important topics, and all available for free. So just kind of go there and check it out.
Sounds great. And would you leave us, Ed, with a few wise words to the accounting leaders and CPAs listening who want to just raise the game and be a little bit more effective in today's fast-moving world?
Kill your timesheets as quickly as you possibly can.
And replace them with?
KPIs, key performance indicators, after action reviews, right? And I would also say looking at value, what's called the value gap, which is that exercise I described earlier. How are we going to create value 5 years from now? So those would be the three replacements that I would suggest for the timesheet. Yeah. They don't look like a timesheet. They don't smell like a timesheet, but they are actually more effective than the timesheet.
Yeah. Well, Kless, that's been, I've just written down the word hip, hard-hitting, insightful, and passionate. Thanks so much for your time today. It's been brilliant.
No, don't thank me for my time. Thank me for my insight or my knowledge. See, time doesn't really matter. But thanks for having me, Rob. I really appreciate it.
Ed Kless, thanks so much for your value today. It's been great.
Accounting Influencers Broadcast Network presents Influencers in Accounting. Brought to you by Advanced Track. Your access to world-class accounting leaders, global influencers, and thought leaders. Discover what makes accounting firms great and accounting professionals world-class.